All right, folks. Tim Davis coming to you guys with another weekly market review. Try to make this quick and painless as possible. Today is Saturday, October the 8th, 2022. You're looking at a daily chart of the S&P. And as you can see, this yellow line is my 20-period moving average, and it has been acting as an area of resistance. And when we were at that low in June, price action was able to make it above the 20-period moving average, and it treated it as an area of support until we reached about the middle of August. So we had a nice little bounce off the bottom back in June. In the middle of August, we started to pull back again. And where are we at now? Right back at those June lows one more time for a retest. Hit those June lows here, got a bounce. Got back down to that area here. The bulls fought heavily, got another bounce. But look where bounced, price action bounced to. Right back up to the 20-period moving average, which has been acting as a strong area of resistance. And now we're starting to trickle lower again. And we have earnings season starting to kick off. And we also have CPI data coming out this week. It's coming this next week. So I say that to say, just be mindful of that, the data that's about to come out, and we're starting to head into earnings season. We're right back at the June lows for another test, and all the indicators are pointing to lower prices. So this bear market is still in full effect. Look at the full stochastics. We got a bearish crossover here. We got the oscillators on the full stochastics and the Williams percentage pointing straight down. RSI starting to curl over again, with price action back at a level of support. I do believe we're going to break this level of support over the next week or so. So that's something that you need to be mindful of and pay attention to. The bears are still in control of this market, folks. So we are still in this bearish market. I don't think that's going to relax anytime soon. If we look at the Dow Jones, we'll see the same scenario. Back at the level of support from the June lows, and it looks like we're starting to break below that level now. We look at the NASDAQ. Again, nothing's changed. We're going to see the same scenario, folks. The bears are definitely in control of this market, and the 20-period moving average on a daily chart is acting as a strong area of resistance, and where price action heading back down towards June lows for another test. And the Russell will look no different. Same scenario. Now, one thing I want to point out is, let's take a look, back this up, look at a weekly chart here. Here's a weekly chart. Look at where we at, folks, as it relates to the 2020 highs, where we got that big drop in price. 2020 highs right here, and we got a big push drop in price. We are right back at those 2020 highs, folks. So previous resistance becomes support. We are actually testing that on the Russell. We break this level, then this level now is going to become an area of resistance again. And we could really start to accelerate towards the downside. Eventually, I think the ultimate goal, the ultimate target, I think we could see over the next year is a test of these 2020 lows. That is a huge possibility. So the Russell again is right there at the brink of breaking below those 2020 highs, and that'll put us right in this range here where we were at before the COVID plunge. So that's something to keep in mind, be mindful of as we continue to go throughout this year in 2023. Look at the S&P as it relates to 2020 highs, and the S&P has a little bit more to go, but not far. That's why you see I have a solid line here, which represents the 2020 highs, and then we have the dashed line, which represents the June lows. Looks like we're about to push below that level now. So next week is going to be a very, very key week. We have bank earnings starting to come out next week, and we also have CPI data, folks. That is what I'm really focusing on. That's CPI data, because the last time we had CPI data print was in September, and the last CPI data we had print come out was September 13th, which is right around here. Again, so September 13th, right around here, we had CPI data print come out, and price action sold off. And we get a little bounce, and we have CPI data coming out again. Do we have another leg like this after CPI data print? That's a possibility. So we need to really pay attention to what price action does on this week. But overall, I think the bears are still in control of this market, and it's going to remain in control of this market until something breaks. I think the Fed is going to push us on the verge of something breaking before they start to ease up, and that may be a while. And not only is the Fed putting pressure on the markets, but everything else. We have geopolitical tensions. We have CPI data just not getting any better. So there's still a lot of things that can affect this market, which I think will continue to put pressure on this market in the long run. Two other things we'll take a look at. Crude oil, folks, if you notice, on the rise again, and that's also not good for markets. Good for those folks who like to invest in crude oil, but not good for overall markets, because it's another sign that it's also going to put pressure. Be an inflationary issue. If crude oil starts to get back above 100 and get back above 100 in a major way and break this 123, that's a huge possibility. So I'll be paying attention to that as well as we continue to move forward. Here's a weekly chart of crude. So we got that big reversal on this past week after OPEC agreed to cut 2 million barrels of oil a day. So again, we see what the reactionary measure was for that. Crude oil up, and it's about to break back above its 20-period moving average on the weekly, and that could be sustainable. So that's something to pay close attention to, but will also put pressures on markets. Let's take a look at the VIX real quick. Let's take a look at the daily chart of the VIX, and we'll look at VIX futures, and then we'll wrap this up. So here's the VIX, and folks have been watching me over the past 2 weeks. I said that we were in this range at one point below $30, below $30 level. We were in this range at one point below the $30 level. I said, well, if we break out above this level, this $20 $30 level will turn into an area of resistance. So we did that, came back down. Look what happened. Back down to this level again, and look what I also caught it, the 20-period moving average. So now the 20-period moving average over here is acting as a level of support for the VIX. And what do? We get this nice little bounce off that 20-period moving average. So I think the VIX is definitely in a sustainable uptrending channel now. So we could see much higher prices in the VIX over the weeks and months to come. So that's something to pay close attention to as well. All right, folks, I think we covered everything. So we looked at crude oil, looked at the VIX, all major markets. Again, next week we have CPI data coming out along with the earnings. My expectations is that we continue to see a move up in the VIX, and overall markets, we're probably going to see possibly another push lower next week. That's a huge possibility before we see a bounce. Now, I do think if we hit on the S&P, I think that if we drop back down to the area of the 2020 highs, we start to drop below that, I think we'll start to see some type of move higher in the VIX. I mean, in the major markets, just to get away from this section that we dropped below in 2020. think if we get below these highs of 2020, we'll probably start to see a rally. If we drop below this solid line and run back up to test this level before we see the next shoe to drop. So I do think we're looking for lower prices and then a possible, ricochet or rally back off of those lows. And we could see us, I mean, when I say lower prices over the next week or so, it could look drastic, folks. It could look drastic. We could see a sharp move below the June lows before we see a possible bounce. So something to pay close attention to as we head into next week. The bears are still in control of this market, folks, and it doesn't look like the bears are going to let up anytime soon. These next 6 months to a year is probably going to continue to look extremely rough, and volatility is going to be highly elevated. So, all right, I'll check you guys out on the next video. Didn't have much to really add except for the bears are still in control of this market. See you guys on the next video.